Good morning, ladies and gentlemen. It's great to see so many people here. Hopefully it's because you're really interested in alternative payments and obviously hearing us talk a little bit about the fraud or the not fraud, as we would hope, against alternative payments and how they're perceived in the market. I'm joined on stage by two of my colleagues from business development at WorldPay. Luke Flomo and Neil Terry, and these guys will help us during the Q&A. By all means, if you have any questions, just rather than save them for the end, if you want to ask them at the time, then that's fine. Obviously we are on a strict timeline, but I prefer to take questions as we go along because I think it will help flow. Just a very quick introduction. For those who don't know WorldPay, we are an acquirer, UK-based acquirer, although our business is global. As well as being an acquirer, we are a payment gateway and also a provider of risk management services as well. So if you weren't aware, I'll get that little plug in. Okay, so I want to talk to you today about alternative payments, what they mean, and what it could do for you as a business. Can I just take a straw poll? Can merchants put their hands up, please? Okay, so we've got some merchants. Is anyone already using alternatives, as you might know them? No? Okay, good. So we've got a green field, so this is good. So we'll go through from the start and just describe what the alternative payments field is and give you our view on where the market's going. A little bit about the risk profiles of those payments and how you can sort of get involved with alternatives and how they can help you grow your business, which is what it's all about. So what are alternative payments? In short, they are any payment method which you as merchants take on your website that aren't credit cards or debit cards. Okay, so the obvious ones that you will know are what we call wallet products, so the likes of PayPal in the UK is probably the most obvious one. Gaming merchants will be more used to using alternative payments because it's a more acceptable means of paying other than debit and credit card in that particular space. But ultimately, alternatives that you do select to show on your website or your web pages need to provide the user, the customer, with convenience, i.e. it's easy to pay, and security. And of course, the likes of PayPal or other wallet products do that in that they operate what we might term as a one-click model. Literally, your card is stored in the wallet. You don't need to input your card details when you pay. You just literally add a unique number to the payment authority and away it goes, and you know your card's being debited in the background. Alternative payment schemes are mostly domestic. What we mean by that is that they are in country. So whatever country you're operating in, they are in country. So in the main. So if you're in Holland or trading in Holland or Germany, then you'll be using, on an alternative perspective, something called Ideal, or maybe GiroPay or Softvault in Germany. Okay, but they do tend to be local schemes. Okay, but as you'll see as we go on, there's a huge variety of different payment types out there, and your job as merchants is selecting for your business the ones that are going to give you the most, if I can use the phrase, bang for your buck, because there are a lot out there, and we'll explain that in a second. It's an amazing sphere, and the alternative payment market is exploding. Some alternatives like e-wallet products do have some characteristics of cards, as I highlighted earlier on. Cards are generally stored in wallets, so you can store bank accounts or actually some prepaid cash vouchers as well. So it's not prescriptive to cards, but I think most wallets do contain cards and bank accounts. Okay, so a little bit about the growth expectations in this particular market. It's exploding. Okay, alternatives at the moment are worth about £165 billion worth of revenue globally. and our expectations are that will exponentially grow by something around compound annual growth rate of about 13% a year. Probably making up about 15 to 20% of the total e-com volume expended by 2015. So it's a huge market, and for clients with global or at least cross-border aspirations, having to deal in alternatives is almost becoming, in my opinion, a must. Okay, where do we expect to see the growth? Well, it is wallets, and it is what's called real-time payments. We'll go into these in a little bit more detail in a minute. But you may be surprised to know that we actually believe that mobile is actually going to be quite small. Just to be clear, when we talk about mobile payments in terms of alternatives, we don't mean using your mobile to make a payment on a standard website. What we mean is using your mobile bill to make the payment. So debiting your mobile bill for your payment. So that doesn't include things like NFC or anything like that. And mobile payments used in that sphere is actually going to grow very slowly, we believe. But double-digit growth in e-wallets and in real-time payments. And, of course, as you'd expect, alternatives differ greatly by the vertical and by industry. So when we mean verticals, whether it be online retail, gaming, whether it be digital content, which is obviously exploding, or any other vertical, we do find niche players or niche providers of alternatives in those markets. And if you want to play in those markets and in particular territories, then you have to look at certain alternatives. And again, we'll talk about that in a second. But we do expect to see growth in all sectors, but in certain payment types, definitely some will grow better than others. And in some markets, we'll see some markets perform better in terms of growth of alternatives than others. Okay. So if you're looking at a cross-border strategy, a global strategy, or an expansion strategy, and you want to clearly you're going to look at what payments are particularly prevalent in certain territories. So there's an opportunity for you as retailers to supplement your existing payment methods. We try not to say move card volume to payments, because what we're looking at is helping you grow. So you want to grow your sales and increase sales, and to do that you look at certain alternatives in certain markets to do that. But as you'd expect, as we take on these new alternatives, and some of them are very green, they're alternatives are coming on all the time. And it takes us in the industry, in the payments industry, time to work out how secure they are, and what the value is for merchants, what the likelihood is of take up in a particular market. And that's the information that the payments industry can pass to you, because that's how you create your strategies, your payment strategies. Okay. In terms of the fraud piece, we'll talk a little bit more about it in a couple of slides' time. But essentially, alternatives in general are less risky than some card products. However, there are exceptions, and there are still sort of risks that you need to mitigate through using fraud tools and some of your own cognizance to ensure that you're not opening your business up to unnecessary risk when you take on an alternative. Okay. So the guiding principle there is take only alternatives that you know have a future, have a particular grip in a particular market, and that if they do unfortunately get reversed, it doesn't cost you lots of money in managing that reversal. Okay. Talked earlier on about the size of the alternative payments market. It's huge, absolutely huge. And believe it or not, at the moment, and I say that literally they are coming on by the week, there's 230 schemes that we know of in the market. and as it say, it's about 100 of them actually blip on the radar. The other 130 are so small in volume, they don't even blip the radar. So, when you're looking at a strategy of where do I go with alternatives, then we're looking for a payment method that has traction, has future, and already has, a known market. That will give you your best opportunity to gain new business. And out of those 100 quantifiable, only 25 of them account for over 80% of the total number of payments generated. So, in terms of scheme value, so it's huge. The top 25. If I were a merchant going into a new market, I'd be looking at the top 25 to start with, and moving from there. And what does the payment strategy look like for a new merchant? No more than, on top of standard card products, no more than 2, 3 maybe cards. Additional payment schemes will give you the full market coverage that will give you that increase in sales that you're expecting. Okay, any more than that, and it's a law of diminishing returns. Okay. Okay, so we've talked a lot about the type of schemes. So let's just drill down a little bit more into what those schemes are. So ultimately, there's 6 different schemes, or you can lump them into 6 different types. Okay, we call them payment types, and within the payment types, there are different schemes. Okay, so real-time bank transfer, one of the schemes we believe is going to proliferate in the market going forward. In essence, it is the customer making a real-time bank transfer to pay for goods and services. So if you implement one of these particular payment types, and Ideal is a prevalent one in Europe, it's one of the key Dutch payment methods, you'll find that when a cardholder touches that Ideal button, you'll be transferred to, or the customer will be transferred to his bank account to make a real-time bank transfer. So you can see that the benefit of that is that he has the funds in his account. Okay, and generally speaking, real-time bank transfers are done obviously in real time, and they give you the seller the benefit of having known that the money is there when you ship the goods. A proviso which we'll talk about in a minute around that. But generally speaking, real-time bank transfers very low, if not non-existent in terms of fraud. Offline credit transfer, again, very low in fraud prevalence. Essentially, I will select my goods and then I'll pay for them in what we call an offline manner. So I will go somewhere else to make that payment. So I won't be making it on that particular website where I'm purchasing the goods. I will place an order and then I'll make a payment elsewhere. Some of the schemes in South America, for instance, such as Bolito, you go to a local bank and you make a credit transfer over the counter into the merchant's bank. When he receives the payment, he ships the goods. So as you can see that, order fulfilment happens after the money's received, so very low in fraud. Okay. Direct debit products, we know from good old England, it's a very straightforward payment method. So the merchant or the retailer pulls that money from my account as a card holder. Okay. The problem is with direct debits, if the money is not there, then we have a type of chargeback scenario. Okay. So it's not quite as safe as other methods, but it's very simple and straightforward, and it's what we know. E-wallets are probably what we believe to be, along with real-time bank transfer, one of the key drivers for the alternative payments market that's going to get us to that doubling of transaction volume by 2015. So the key ones, the key players in this market, there's 2 that are head and shoulders above anyone else, and that's PayPal, and it's a payment method called Alipay. Alipay is large simply because it's one of the prevalent alternative payment methods in China. Those 2 will provide the most volume for you. E-wallets, essentially you bury or you place a card or a bank account in an account, in a wallet, and it operates what we call a one-click model, so you don't have to retype your card in to the payment screen. You just push the PayPal button, say you want to pay by PayPal, and PayPal does the rest, debit in your card or your bank account. So from a merchant perspective, it's safe. From a cardholder perspective, it's also very safe. Again, we've got some stats on that. Okay. And mobile, we've talked about that. Essentially, I'm using my phone bill to make a payment, which can be a nasty shock at the end of the month when I found out I've bought X, Y, Z. Mobile payments tend at the moment, because they're not, they don't really, there's not a lot of them around in terms of schemes, they tend to be very expensive. And it will put a lot of customers off purchasing using mobile technology. Okay, so just to point out a couple of things on this particular slide. This is those 6 payment methods we just talked about, and the schemes within them. You can see that within the wallets, Alipay and PayPal are by far the biggest. Another one I want to shout out to you is the real-time web banking, or the real-time bank transfer. We've got IDL there, which accounts for 70% of the alternative market in Holland. So if you're in Holland, then you need to be looking at IDL, because it's one of the key payment methods. If you're in Germany, ELV, which is a direct debit method, and actually it does have some downsides in terms of chargeback, sort of legacies with it, is a key one, as is German offline bank transfer or offline credit transfer in Germany, and online transfer. So alternatives is very big across continental Europe. COD is as you know it. It's as it is today. It's checks, it's cash, it's paper, and obviously it's very secure because nobody's going to ship goods until they've got cleared funds from those items. Okay, again, just to pick this out a little bit, just to make sure we keep on our timeline. Just wanted to highlight a couple of key areas around the type of services, or the type of services, that are being used for the various types of payment methods. So, repeat purchases can be small purchases generally. Are using the e-wallets, so they're using the PayPals, they're using the real-time bank transfers, because they're easy to use and they're safe as far as cardholders are concerned, and you can pay small amounts. Larger online payments, like buying air tickets, that are inherently risky, real-time bank transfers, where me as an airline know that I'm going to get paid before I dispatch or before I issue that ticket, is important. Okay. Also, in terms of costing, some of these payment methods are what we call ad valorem, which is basically I'm charged on the value of the payment, and others are fixed fee. Clearly, in large purchases, as a consumer, I'd be interested to pay with an item that actually costs me not a lot of money, and fixed payments such as Ideal are quite popular for large payments like air tickets, for instance, where me as a merchant, I know I'm going to get paid because it's a real-time bank transfer, and also I know as a consumer it's cheap because it's a fixed fee. Okay, so these are the sort of decisions we're making as merchants, as the payments industry, as to which payment methods I want to implement as I go cross border, because I know I'm going to get the value, and I know that I'm going to get traction from the customer base because of the fact that it's cheap for them to use, it's easy for them to use. Okay, and the subscription sort of arena, we know it obviously as predominantly direct debit. But it's also real-time bank transfers is also used there as well. Very little effort from a cardholder perspective to actually make the payment, and it's generally used, or it can be used for recurring payments, and real-time bank payments are also used in the subscription arena. Okay, so the business case. The business case for accepting alternative payments. Number one is improved customer acquisition. You're opening yourself up. If you allow alternatives, you're opening yourself up in your various markets to a customer base you never had before. Okay? If all you did is accept cards, then you're stopping an element in that market, and it depends on what market you're in, an element of people, whether they be unbanked or whether they be underage for financial products, you're stopping them using you for buying whatever goods and services you're offering. Okay, so typically in various markets we can prove that using alternatives increases sales and in essence bottom line revenues by between 10 and 20%, depending on what market you're in, depending on what products you pick. So it is critical picking the right products, backing the right horse. Okay, and it does provide you with lower business risk. We've talked about online bank transfer, we've talked about offline bank transfer, COD, and e-wallet products. These are inherently less risky because of their nature and the way they work than traditional card products, okay? And less chance of chargeback as well. And depending again on the type of product that you choose, it's going to be cheaper for you, purely because there is an element of payment types that are ad valorem, but there's a larger element that are fixed costs. Okay? Okay, so customers. What do customers say? Our customers basically have told us in a survey that we did that the reason they would adopt alternatives is because it increases sales. Well, that may be obvious, but the proof's in the pudding. And our customers are telling us that by using alternative payments as a supplementary method to cards, they are increasing their sales. A couple of examples for you, but between 10 and 20% is not unusual, purely because the markets that they're entering, 10 or 20% of those markets use alternatives. It's opening their market up to a new customer base. Okay. So, what about the downside of taking alternatives? Let's give a balanced view. The alternative market isn't regulated, not in the same way as the cards market. So there's no card scheme, Visa and MasterCard, sitting behind the scheme, ensuring that rules are adhered to, etc. It's down to individual schemes. Your alternative provider that you choose to go with will have a handle on. They'll be working with alternative providers that that have been working with those schemes for a while and will understand the risks that are inherent in a particular scheme, and will be able to point those out to you and point you towards schemes which are less risky. That's key. There's no PCI DSS or PCI PED in the alternatives market. Okay, no security standards about keeping data secure. Again, it's about knowing who you're working with, and your payments provider will have that knowledge, and it's key to tap into that. There is a potential with some methods for non-settlement. That means even though the payment type you choose, the customer may have authorised the payment, or it may look like you've got cleared funds, I don't think I need to tell anybody really, in terms of fraud, in terms of protecting yourself, wait until you get cleared funds in your account before you ship the goods. You'd wait until you've got cash in your hand, you'd wait until a cheque's cleared in the COD arena. Whilst these methods are inherently less risky than cards in terms of account takeover and first-party fraud, it can happen. So even in real-time bank transfer, wait till you've got the settlement confirmed by your payment provider before you ship the goods. Okay. Sorry if that's obvious, but it's about protecting yourself. Some of the online bank payment methods, they don't offer what we call two-factor security. So where you and I go onto our online banking, we'd enter the system through selecting my first, second and fourth or whatever of my password. If I want to make a payment once I'm in my online banking, I might have to use an additional security device which talks to my chip on my card, okay? And it creates a secondary PIN, second factor authentication, okay? Some of the methods, the online banking methods, don't offer, because they're wide and varied, they don't offer or they don't ask for second factor authentication. So that may be an issue, and that may, in very rare circumstances, open up the opportunity for middleware to infiltrate systems and do something called keylogger, where they're checking for keystrokes and maybe picking up passwords. But it is very rare, and again, it's about working with your provider that understands the market, that can give you advice on the best payment methods that will reduce the likelihood of that happening. And finally, alternatives don't provide as much data as credit card transactions. So, for instance, in a credit card transactions, your fraud provider will pick up the card bin, who issued the card. He'll know where it comes from. He'll use that to triangulate the IP address and the country code of the transaction and work out whether or not that transaction is at higher risk. With these alternatives, clearly you don't get the same sort of geographical, you don't get the same IP location or any sort of geolocation surveys coming through as you would do with a standard fraud system. Okay, so again, it's about being careful about which methods you pick, but your fraud provider should have a proposition that allows you to safely undertake alternative payment methods. Okay, so there's a whole host of checks that can be done around blacklists, around handshake checks with the providers to make sure that the account is valid and it hasn't been compromised. You should ask your fraud provider that they are undertaking these checks, okay, as well as obviously what they do for card checks. Okay. Just a couple of things to end. Alternatives fraud is lower than in cards. Our clients are telling us that. You may say because alternatives actually present lower volumes, and that's true. But on a like-for-like basis, our surveys have shown that alternatives are less risky. And what are clients saying? What are customers saying? Well, you see a large volume there. 40% of customers are actually indicating that they use PayPal for security. Why is that? Well, quite simply, it's a one-click. They don't need to input their card details in a website which is deemed to be by them. This is the consumer. The reality is what it is. The reality is what customers think it is, and they perceive that wallet products are less risky than card products. That's just a fact. Okay, so by entering this market, not only do you tap into the new markets such as the youth market and the unbanked, and also other types of credit like prepaid credit, which is used for online gaming. These are all new markets you can tap into, which you're not going to be able to access by just offering cards. Okay, I'll go quickly through this, but essentially the business case for you guys around lower chargebacks is by taking alternative, certain schemes, and I've just highlighted a few here, present us with the opportunity to not have a chargeback. Not to say you might not have to refund on occasion, but effectively on a chargeback where you're not in control, it doesn't happen on quite a number of these alternative schemes. So that saves you money. Why does it save you money? Because you don't have to manage chargebacks. Okay. Or the cost around managing chargebacks, or lose the goods as well as taking a chargeback. So it's a double whammy. Okay. essentially, for certain products where there are chargebacks, the instances of chargebacks are less, quite simple. Okay? So, last slide, and to sum up. Sorry, Paul, I'm just finishing. How will you win as a merchant in this space? Okay? Quite simply, work with a trusted partner that has experience in this industry, that can offer you advice about the best alternatives to take for your industry and for your geographical sector that you want to trade in. Okay? Try alternatives. Monitor them closely. Be prepared to bring more in as they get traction and take some out if they're not getting traction. Okay? Make sure you listen to peers. What peers are saying about the payment schemes that are working for them. And follow them, because if they're in a market and they've got a track record, then there's something to be said for for a qualified advice like that. And finally, if you're in a market and you're not sure, and there's a number of alternatives, then try them. Try them, see how they work for you, see if they're giving you a revenue uplift. If they're not, then drop them and look for others that are getting traction in that market. It's a movable feast. New payment schemes are coming on every day, literally every day. And payment providers and WorldPay, we're evaluating them and giving proactive advice about which payment methods they should, which horse to back, because this doubling of growth, you want a part of that, and to do that, you need a successful strategy to work with a successful partner. Okay, so that's my lot.